Hello friends, welcome back to another Alpha League sesh with me, AVB. Today I am thrilled to be covering PembRock Finance. And as you may have noticed, I have not been making many videos recently because I've been flat out, but I've carved out some time on my Saturday afternoon to cover PembRock for several reasons. We will be going deep into what PembRock is as a platform and all its features, and also we will be covering some of the basic concepts for beginners such as yield farming and leverage yield farming. But just before we jump in, I want to provide some context. When you start a protocol and a network from scratch, and then you try to create an entire financial system on top, there are so many moving pieces to put together. And one of the things that makes DeFi very unique and very exciting for the future is composability. So I really like when you have many different teams around the world. In many instances, they don't even talk to each other, but their creation or their smart contracts are an open network that anyone can plug into and connect. So with PembRock and leveraged yield farming, we're starting to see that new layer being built on top of existing platforms to create more opportunities. So as far as capital efficiency go, seeing the near ecosystem grow and mature, and especially if you are a DeFi degen like myself, getting just a bit more returns from your money, because we know that things can be tough during this bear market, PembRock is an amazing opportunity. So with that introduction, let's dive in. So a really quick overview of what the protocol is, and then we'll start deconstructing some of the concepts. First, let's acknowledge that the PembRock Fox is a mean-looking motherfucker, and I love it. He's got a jacket like he's about to kick some ass, and he's got the Near logo and the PembRock logo on the badge. I have not seen a cooler logo than these. Actually, probably the coolest one before this one was Croncats. Shout out to Croncats. Okay, let's dive right in. So with PembRock Finance, there are basically three ways in which you can make money, which I guess the only thing that most people care about. So the first one is you can provide assets to PembRock and lend them to people that will be doing leveraged farming. The second thing that you could do is engage in leverage farming, which is borrowing assets to farm. And the second one would be to stake the PEM token to collect profits from the first two categories. To fully grasp what this all means, we should start to deconstruct what does yield farming mean. Just before we mentioned that when you try to bootstrap an entire network from scratch, you need to think of all the required pieces and all the incentives. So when we look at the traditional markets, you would have market makers, traditionally in the form of banks or private equity or hedge funds, sophisticated money that comes in to provide both sides of the market. You have order books, you have bids. In crypto, we are solving all of these with code. So we have a concept called automated market maker, such as Ref Finance. And what the automated market maker means is that we create pairs and we're going to create pools of assets on both sides. And the code automatically sets the price based on the relationship of those two pairs. So for instance, if we take any random one for an example, say ETH wrap near, there will be automatic execution and automatic exchange all happening on the code, all being decentralized. No one can stop this as long as there are enough funds in the pool. And the bigger the pool, the more stable the price. And just like that, we've created a new financial system. So as you can imagine, the challenge is how can we incentivize people, the people that owns the network, to also provide the liquidity to make this financial system work? The solution so far has been what they call farming. So by farming, we add additional incentives. Ref Finance now is pretty cool because they show you the pool fee. That would be the return that the liquidity providers are making on the actual swaps from the tiny fee that Ref Finance charges. As we can see, for most pools, the pool fee is actually tiny. However, we supplement the returns for the pool to encourage people to join early. So for instance, on this random pool that I've just selected, we can see how there's a range of tokens that have been added there. If we go to the USN USDT farm, which is super sexy now because if you're bearish, being able to get 13% return in a combination of USN and Ref is super attractive. So this would be the concept of farming. And I guess that yield farming It just goes to the fact that you're an active farmer. You're always out there looking for opportunities. You want to maximize yield. Assuming that you have the assets, you're always looking out for opportunities. So that's yield farming. Now enter leverage yield farming. What problem is leveraged yield farming trying to solve? If you scroll around, you'll see that some of these returns are pretty sexy. They're pretty big, chunky numbers, quite often in the double digits, triple digits sometimes. However, as every one of us have realized, 175% return of $100, it's not really that much. Like, it's not going to be life-changing money. We're still going to be working at McDonald's. So what we really want to do is to try to deposit as much money as possible to get the highest percentage that you can on that money. So the question then becomes, well, if I know that I'm going to be earning 175% on whatever I deposit in, where do I get more money from? And at the moment, technically, you could borrow money, say, from Borrow Cash. However, there are a couple of problems of why borrowing money from Borrow Cash is not an optimal strategy. We have already established that we don't have any money to enter the pool in any meaningful way, so it is unlikely that you have spare funds to open an over-collateralized position. So if you want to borrow $100 from Ref, you likely have to deposit $200 worth of, say, ST near. So leverage yield farming exists to solve this very specific problem. Through integration in the one platform, what PembRock is able to offer is create a marketplace of both lenders. So you deposit your assets that you're willing to lend to farmers. But because PembRock manages the entire relationship, they can have a much tighter control on the risk management. Namely, they know where the assets that are being borrowed are going into. They know how much that money is returning, and then they can distribute the funds. To explain this differently, if I borrow money from Borrow Cash has absolutely no way of tracking whether the money that I'm taking out in the form of a loan is being used to buy a car, or whether I'm using that money to earn an income elsewhere. If I've spent the money, then technically I'm going to have a problem paying it back, presumably, like the risk increases. That's why it has to be over-collateralized. Their guarantee that I'm going to pay back is the ST near that I put down as guarantee or as collateral. However, for PembRock, the guarantee that you're going to pay back is the loaned money itself. So you don't have to over-collateralize. So what this means is there are some really attractive opportunities here for every profile level. So let's jump into the application so that we can see. As we've just mentioned, there are two ways of making money. One would be lending, lower risk profile, and then would be farming. Hello, DJs. Okay, let's connect iWallet. So we've just logged into the PembRock application. By the way, I should have mentioned earlier that the protocol just went live less than 12 hours ago at the time of recording this video. So the opportunity right now would be there's going to be a special extra allocation of the PEM token for early lenders. You could say that the protocol now is in like the bootstrapping phase, so the farms have not been enabled yet. Right now, there is basically a call for depositors or lenders to supply enough assets to later enable the farmers to borrow that money. So we can see there are some pretty chunky, healthy returns there. I'm not going to lie, I did stay up till 2 a.m. in the morning so that I was the very first one to join the farms. And when I joined, there were 500%, 400%, 300%. There were some pretty chunky returns. It's always a mixed feeling to have when your APY percentages are coming down, so you're personally making less money, but you see the protocols grow and adoption across the broader Near ecosystem increase. I guess that's a compromise I'm willing to make. Well, I'm just going to have a really quick glance here so that you get an idea of the percentages that you could be getting. And the reason why I mentioned that lending would be like a lower risk option is because basically this would be what we call single-sided staking or like a single-sided deposit. That means is you put in one asset and then you take out presumably the same amount of the asset plus the rewards. So for instance, if I add wrapped near, this is how much I expect to get back in PEM tokens. So this would be the incentivized element. And over here, once the farms start, that would be how much interest I would be earning from the farmers. So in a nutshell, PembRock becomes a marketplace or a very smart and efficient intermediary whereby you can lend your money to people that want to farm. So theoretically, when the farms are enabled, I will be able to take out, say, $10,000 worth of borrowed funds or whatever ratio it is from the assets that I put in initially and supercharge the amount of returns that I am getting from farming. And the reason I'm really excited and why I think this is a very sexy model is because it really works out for everyone. You may be paying relatively high interest rates on the assets that you're borrowing, but because you're earning so much from the farming, you pay that fee anyway. So you're earning more money from farming, from money that you didn't have beforehand. And then as a lender, you're earning a pretty healthy percentage because there is someone making money from your borrowed assets. And the protocol is also making money. So that takes us to the PEM Tokenomics. I don't like to speculate. This is not financial advice. House sitting for a cat now because I'm basically homeless after the current drop in price. However, the question of what role does a PEM token have in the ecosystem is a very important one, considering that currently all the rewards are paid in PEM tokens. So you want to know whether you're going to be holding onto a shitcoin or whether this is a worthwhile opportunity for you. So jumping over to the PEM Tokenomics. PembRock Finance token is PEM, PEM. There is a total supply of 160 million tokens. And down here, we've got the distribution. So the key bit that we care about is all fees are collected and are distributed among PEM holders who have staked in our protocol, ! And then the most important question after we confirm that the revenue and therefore the value that the protocol is generating is going to be captured by the token is, how does the protocol make money? Farmers are charged 10% of their yield farming rewards. Lenders are charged 10% of the borrowing profit. And every time a position is liquidated, 5% of the position's value is paid as a fee. So here is where the speculation begins. Here is where you have to do the homework, where I'm going to do my homework privately and basically do some back of the envelope maths. How many PEM tokens are there out there? How many PEM tokens are in circulation right now? And how many will be in circulation over time? How much TVL do we think that PEM could potentially accrue? And hence we can start to do an estimation of the fees. And I personally get really excited because PEM will be launching initially with Ref Finance, but I can see a leveraged yield farming platform such as PEM becoming a really good distribution channel and go-to marketplace to discover new opportunities. Because, for instance, one of PEM investors, Jumbo Exchange, it's not very well known by anyone. It doesn't really have much volume yet, but it does have some pretty attractive yield farming opportunities now. So my reasoning is that if PembRock is able to attract the Ref Finance crowd and the DeFi in general crowd, and they're able to give some visibility to Jumbo Exchange opportunities, you could potentially have a lot of money going through PEM into any number of opportunities across many exchanges. So basically, they would be doing the curating work of finding the best farms out there, and the absolute savages that want to go all in on these farms just have to come to PEM to leverage. And I can see this being an interesting catalyzer for capital allocation. The other thing to take into account here is that there are more DEXs coming to the near protocol. So it's not just going to be Ref and Jumbo. There's going to be many more interesting protocols coming online. That, once again, could give PEM a very interesting positioning as a liquidity hub to be able to supercharge the returns on any and all of these protocols as they come to market. Now, finally, and perhaps most importantly, PembRock has been audited. There is a link to the BlockSec audit on their documentation and their GitHub. And as always, if you are considering entering on the leverage farming side, just remember that impermanent loss would still be a risk for farming. Now, we've covered impermanent loss in the past, but very briefly this time, impermanent loss is the risk of the value of the two assets that you put into a pool changing in a way where you actually lose money. So the best way I can describe it is, let's say that you put USDT and wrap NEAR into a pool right now, and then NEAR goes to $20. Impermanent loss would basically mean that you sold your NEAR cheap to people that bought off the pool, and you may have had more money had you just kept the NEAR with that going into the pool, because the capital gains would be higher than the fees from the pool. So impermanent loss is something that is very important to take into account. If you have any questions or comments, let me know in the comment section below, and make sure that you subscribe, because I am once again committed to making more content. I can't stress enough how much development is happening in the NEAR ecosystem now. So do not be deterred by prices. Do not be deterred by the doom and gloom. It is only sad and lonely if you're trying to make money from trading. But if you're a builder, it's a bonkers time, and there's a lot happening on the NEAR ecosystem to keep us busy and happy and shipping. I hope that you enjoyed this video. Let me know in the comment section below if you become a PembRocker, and what else would you like me to cover in the next videos. Thanks so much for your support, and I'll see you soon. Bye.